I'm Justin Birnbaum, staff writer at Forbes. Joining me today is Ricky Paugh, the founder and managing partner of consultancy 1440 Sports. Ricky, thanks for being here with us today.
No, absolutely. It's a real pleasure, Justin. Good to see you.
Before we dive into some of kind of the industry topics, I want to ask you, give me an overview of 1440 Sports, what kind of work you guys do, what kind of deals you do, and what spaces you operate in.
So we are for lack of a better phrase, a London-based sports marketing agency, but we have a very specific niche. So we work primarily with B2B organizations to help them kind of use motorsport as a platform to go to market. So we work with organizations like Dow, like TDK, like Udemy. We've worked with Hewlett-Packard Enterprise, Trend Micro, ForcePoint, Fortinet, kind of the list goes on. And the biggest kind of, let's say, global motorsport platforms in the world, Formula One, Formula E, I'd put NASCAR and IndyCar certainly in there as well.
It's a great time to be in the sports business, obviously. Okay, so Forbes, we've made our name in tracking team valuations over the last 3 decades, and combined in MLB, NHL, NBA, and NFL, and I call out those 4 because that's the farthest back that we have with the data going, 27 years. The 124 franchises in those leagues are collectively worth $453 billion. So I want to ask you, why are valuations so hot? Why are we seeing this kind of outpouring of money into the sports space, whether it's, on the commercial side and kind of all these different revenue streams? What is kind of your take on that?
Yeah, I mean, it's certainly been an amazing time to be in sport. The short answer is that I think that sport platforms now almost operate as infrastructure assets, if you will. And what I mean by that is you have kind of contractual indexed cash flow. So sponsorship deals, they're 3 years, they're 5 years, they're 10 years. Media deals, they're 3 years, they're 5 years, they're 10 years. So you have this forward-looking cash flow. And then a lot of the sporting teams, and if you look at Formula One, really good example is now they've added in cost caps. And so you've got predictable P&L, you've got recurring cash flows, and that's the model for really, really good business.
Over the past 27 years, the average team in these leagues has gone up, that I mentioned, has gone up about 1,800%, well outperforming the S&P 500. We throw out the term like bubble or, can things really go up forever? But my question to you is, is that the case? It feels like, every time we think, okay, we're about to hit a point where things are going to level off, then the Lakers sell for $10 billion. Yeah. Do you think these can continue to rise, or that we're still kind of on the upward trend, or where do you think we are in the life cycle here?
If I'm honest, I don't know. We're probably somewhere in the middle. And again, I think it's probably a platform by platform question. I think EPL is probably a little overheated. I think we're seeing that. I think the number of transactions is certainly reduced from, if you even go back, 5-10 years ago. Look at Formula One as an example. I mean, McLaren just traded at, $5.3 billion valuation. That puts them somewhere like a mid-pack NBA team. And that tells me that, they've got this global platform. They've got a predictable model. They have markets like the US where they really even haven't gotten that much penetration. I know it's a growing market for them.
I want to touch on those newer markets in a moment, but before we get there, obviously one of the biggest things happening in sports is kind of this arrival of institutional money. And in different areas, it's been in there before, but now we're seeing kind of the major North American sports leagues, passing rules to allow private equity to invest in teams. Also kind of surrounding companies in the industry are messing with PE money and kind of using that as a tool. What does the arrival of institutional money do for these teams? Is it merely just we need more liquidity, or is it beyond that?
I think, you have some teams that have needed exits, so I think it's allowed owners to exit. It's put more available cash there to allow them to exit. Otherwise, it's that pool of people has been pretty significantly limited. But overall, I think it's a positive thing. It allows these teams to be able to make some of the investments that they need to do in order to grow. Again, if I go back to English Premier League, most of the ownership, up until 10 years ago, has been pretty kind of domestic, provincial owners, local boy made good. Suddenly now with this big asset, and you get these institutional dollars that come in and allow them to actually start and build a platform. It's great.
So I guess I am curious now that it kind of puts a thought in my head, like the influx of American owners in the English Premier League and kind of this rapid commercialization of soccer over there. Do you see that kind of, you mentioned it leveled off to a certain degree, but do you see that kind of changing things as that evolves?
Well, I think there's probably less opportunities. Yeah. It's always a blessing and a curse depending on, which English fans you get. So I won't comment too much. I don't think that Chelsea is having a great time of it right now, but there's no question that when fans see an American owner come in, they expect that there's going to be a certain level of investment, there's going to be a certain level of commercialization, there's going to be a little bit of shine added to the club, a little bit more of a global exposure. So, on the whole, it's been really positive, I think, for both American investors and British fans.
One of the things I want to talk about is just how hard it is to always measure a return on investment in marketing and sponsorship. So with the brand sponsors you're working with, what are you typically seeing in terms of how those things are being measured? Like you said, like my technology is being put on display and then I'm also kind of, making money off of it. That's great too. But what are you seeing in that area?
Yeah, I mean, every company's different. There's always going to be a bit of an amorphous kind of golden gut. I will say that what's been one of the reasons I do think that you also are seeing this influx is that you're seeing your peers that are already in the sport. There's a certain amount of, well, they must have done their homework and their due diligence, and if it's good for them, then we should also be in there, right? So it's made it easier for senior executives to go to their board and say, we need to go play there because that's where everybody is. So, but in terms of measurement, again, this is a lot easier for a B2B company than a consumer brand, right? So consumer brand needs to build that brand over time, and then they'll try to do some attribution as to what activities help them drive that. Maybe their sponsorships were part of that. With B2B, I can kind of tell you, hey, I couldn't get a hold of these companies over here ever before.
Yeah.
And then I invited them to Monaco, and suddenly they wanted to meet with me. And then suddenly their calendar came available, right? And then I spent a whole day with them, where normally I might get 30-minute meeting. Right? And I spent a whole day with them. Now they really understand me. They understand my business. They understand my technology. We have an opportunity to build a relationship and build trust. And that allows me then to say, hey, that company that would never talk to me before is now a commercial opportunity of $10 million a year of annual recurring revenue if we're a SaaS software business or whatever it is. And so we can attribute to those opportunities. And then after that, you can start to layer in brand growth, employee net promoter scores, talent attraction, whatever it is, but that's just kind of icing on the cake.
Are there any surprising entrants sponsor-wise that you've seen come into Formula One over the past few years? Like any really outside the box partners that?
No, I mean, if you start to peel them back, you start to understand them. I think Allwyn, coming in as a lottery, lottery provider. But when you drill into that, and you understand how data and technology really sits at the heart of what they do. Then it starts to make a little bit of more sense. But yeah, I mean, I think that was interesting. I just, as I was walking here, Barilla pasta, makes you wonder. But so there's a few out there, but it's great. Rising tides lifts all boats, so it's great.
You mentioned kind of some of the new frontiers F1 has kind of moved into, whether it's the United States, the Middle East, Asia. These are all kind of areas for the sport to grow, and I'm curious, what does that do for the sponsorship side? Is this just a sea of new partners who want to be in the business, or are these partners traditionally already kind of being involved? What does that do, and what does that look like?
I think it's great, right? So if you think about specifically, again, let's go down that B2B technology route.
Yeah.
There's unquestionably, most of those companies are US based. So having 3 races in the US is great, but a lot of organizations want to use a global platform like Formula One to get into new markets themselves. And so Formula One going there as kind of the, trailblazer helps them do that, gives them a reason to engage locally. So it's a really, really great opportunity for organizations. And for any organization that wants to get into sponsorship for the first time ever, what they don't want to do is go have some EPL and a little bit of La Liga, and let's do some NFL over here, and let's do some paddle in Spain and Australian rules football. That's just so much inertia for them to manage. So with the Formula One or Formula E, you have a global platform, and you're right in, and it serves your whole business.
Are we tapped at this point? Is there still a lot of room to grow in these areas?
I don't think we're tapped. I don't think we're tapped at all, right? And again, I mentioned Formula E. I think Formula E is going to benefit hugely from this because there's a lot of organizations that say, hey, that value hurdle now is creeping up a little bit more. But that's a global platform. That's motorsport. That's got great teams in it. That's got great racing. That's got technology. That's got innovation. That's got sustainability. Let's go over there, and the price points aren't as significant as F1. But no, I don't. McLaren is probably a team that I would say they'll figure it out. They'll keep selling stuff because they're Zach and his team are phenomenal. But Cadillac's going to provide people with great opportunities. Williams is doing a fantastic job. They remind me of McLaren 9 years ago. Yeah. The shift that they're going through, they've got a great leadership team over there. They've got a really great commercial team. You see some of the great names that they're putting on the car and partners that they're bringing in. Audi's coming in. That's all kind of green space. So lots of opportunities.
We're in Austin. Obviously, Vegas is coming up too. I want to ask you specifically about these two events. What do you think have been the impact and kind of how sponsorship has unfolded in these two? And I know that's kind of two very different things, Austin versus Vegas, but curious kind of how they line up on the grid. The races don't line up on the grid, but how they line up comparatively.
Yeah, I mean, interestingly enough, I would say that Austin, I think Vegas has added, kind of that bit of sizzle, which is great. They're having their own challenges from a ticketing standpoint, but I think Austin is probably, if anything, probably has is looking over their shoulder at Miami as probably the great new American race. But Austin historically has been this convening platform for technology companies and big American companies. If you walk up and down the paddock this weekend, you're going to see almost every big CEO, executive, chief marketing officer, chief technology officer from big companies. So it's moved and it's made that amazing shift, which every kind of sport wants to do, which is how do we transcend beyond sport into either lifestyle or kind of convening business platform, right? I mean, this has almost become like a Davos in October.
So you have the history in Austin, but let's talk about Vegas. Yeah. So adding Vegas to the F1 calendar, does that almost become like a new category of sorts? Just because it is a very unique race and it's kind of, like you said, it adds the sizzle. So is that a new category of sorts that different kind of brands want to be involved with?
I don't know. I think I think Vegas is still trying to figure out who it wants to be when it grows up. And I think it needs to figure out, the broadcast schedule. And I think, the times that it's on. I think it needs to find a way to play nice with all the businesses and the residents in and around Vegas. So I think time will tell on that one. But so far, if you just look at like who it brings out from a celebrity standpoint and all of that, it's been. I personally like the Vegas race. I know there's a lot of folks who have challenges with it, but I personally really like it.
Is that why it makes sense? Is it just kind of that level of star power that it adds to the Formula One calendar?
Yeah, I think so. Right, it's a street circuit. It's right in the middle of Vegas. Yeah. You can roll right out of your hangover and into the Paddock Club, and you're fine.
As far as teams go, McLaren is one that has had a ton of sponsorship success. And I know now we're sitting in the shadow of their 2 back-to-back Constructors Championships, but these were changes that were kind of unfolding before they started to win on that level. Why do you think that is? What do you think they've done that's kind of built this foundation of success?
Yeah, that story is going to be written for many, many years, probably people a lot smarter than me. But in terms of my insight, I would say that the really unique thing about McLaren is and Zach is a force of nature, but Zach is a commercial guy. Yeah. And when Zach came in 9 years ago, his focus was on building a commercial and a partner ecosystem. And what most teams have done in Formula One is they've kind of really focused on the engineering, and most of those teams have historically been run by engineers. And so they've said, hey, let's make the engineering changes that are going to allow us to win races, and then from there that'll attract sponsors. And Zach flipped that on his head, and he said, let's build a really great platform for sponsors and partners, and let's take really, really good care of them. And then from there, we'll use those funds to go out and attract the best talent and to make the investments that we need to in things like a wind tunnel or a new fitness and performance facility or whatever else it may be. And now he's seeing those results on track. So it's much more been a partner-led model rather than an engineering-led model. And now he's kind of created a flywheel of I wouldn't say infinite success, but let's see.
Well, to that point, McLaren is adding a title sponsor next year. The first time since Vodafone ended in 2013, it'll be McLaren MasterCard. I'm curious, how does bringing a title sponsor into the fold change things for them besides obviously just a huge paycheck on the end of that?
Yeah, I mean, candidly, I don't know that it does. I really don't know that it does. I kind of view, if I'm honest, I kind of view the title sponsors almost the equivalent of a shirt sponsor in English Premier League football. It's a huge global visibility opportunity, and given how these cars, where the visibility is on a lot of the cars, if you really want to get the cut through, then that's where you have to go. So I don't know. I don't know that it changes too much. It's a pretty big paycheck.
Well, yeah. So to that point, reports suggest it's in excess of $100 million annually, and I'm curious. Is a 9-figure deal like that, 9 figures annually, the price of doing business for a Formula One title sponsorship now? Or is this something specific to like the McLarens of the world? Like obviously Ferrari, who knows what a title sponsorship would cost for that. But when you're also under Ferrari at the top of the grid, is that the price of doing business?
Yeah, I mean, this is, again, I don't know the specifics, but reportedly the HP deal is, roughly the same with Ferrari. Yeah. But I think it is at the top tiers. Cadillac has been very vocal about the fact that they're out shopping in the kind of the 60 to 70 range. So somewhere between 50 and 100 is kind of where most teams are kind of sitting on the grid.
Yeah. Speaking of Cadillac, I'm curious kind of what you see the impact of the 11th team. How is that kind of changing the overall business of the sport?
Well, I think it's great, as I mentioned, that I do think that it's also an American brand. I think it's great. I think that is going to be a huge driver to help kind of grow that U.S. market. So from that standpoint, I think it's great. Secondarily, I think it opens up a whole another kind of, let's say, open canvas for brands and sponsors to come and get involved and play in the sport. Naturally they had to figure out the Concord Agreement and anti-dilution, and I think all of that's been kind of figured out. But pending on how Cadillac performs on track, I think it's net positive.
Where are we in the growth curve of F1? Are we starting to flatten out? Are we continuing to grow up?
I think we're still growing, right? And I think we're still going to continue to grow up. Again, I go back to kind of where those market opportunities are. Yeah. And again, the pure economics of the sport. You have a business that has forward cash flows, it has limited cost caps, and it has green space to run in terms of some of these new markets. Asia, Middle East, U.S. Again, largely untapped. Think about an NFL team, an NFL game. An average NFL game on TV is 12 million viewers. Formula One's getting like 1.2. Yeah. So there's a delta of 10x in there. So that tells me that there's still huge opportunity.
Drive to Survive can only go so far. How do you keep adding fans? How do you get people engaged? How do you get younger fans involved?
Yeah, I think this is a big question, right? Because I was having a conversation recently about the opportunity for the NBA in Europe, and one of the things that I think is great about a sport like the NBA is that it's highly immersive. You can watch it on TV. You can go out and play it with your kids. I can't watch F1 on TV and go out and play it with my kids, right? So I think we have to think about what are those truly immersive experiences that we can allow fans to lean into to grow that passion. How do we make sure that also we convert them from being Drive to Survive fans and then suddenly they're tired of season 232? How do they actually become fans? And part of that is if I'm going to take my children to the track, it shouldn't cost me $32,000 and half of a mortgage. So I think we got to find ways to allow fans to engage in the sport in a much more cost-effective way, up and down socioeconomic levels. I think we need to find ways to allow them to lean into the sport that's not at the track, right? So what can they do experientially off track? And then the other thing is then if you look at grassroots karting, how do we make sure that that's affordable for anybody who wants to try to create them a future in driving? And
what does it cost, just out of curiosity?
Well, let's say roughly $100,000 a year for a 10-year-old or an 11-year-old to go karting, and then by the time you I think the stat is something like by the time you reach the age of 18 or 19, it would have cost your family about $30 million.
Wow. Okay. Yeah.
Because it just keeps kind of going up, and so. it's pretty significant, and that really limits your talent pool. Or do we really have the best, kind of 22 drivers globally in those seats? That's another big question.
No, that's a very good point. I do wonder, like how we think about it long term, because you think about other sports, like whether it's hockey or baseball, like these are, sports that cost money to participate, whereas, other ones like basketball and soccer. So like over the long term, you create new fans, like you like the sports you played when you were younger.
Yep.
So I wonder kind of like how you think about that, how you think about that future and what kind of can be changed there.
Yeah, and I look at people like Rob Smedley right now. Who's former chief engineer at Ferrari with Felipe Massa, and a legendary engineering guy in the sport, and what he's doing with Ferdinand Porsche and what they call the Fat Karting League, which is they are building a global platform that allows kids to come and get involved at a very grassroots level for a fraction of the cost, $3,000 a year to go karting, and then have a racing team that they're actually going to then move them through and actually be able to put them in the seat of a Formula 4 car at the end of their career. So I think stuff like that, I think disruptors coming is huge, and there's lots of opportunities like that.
Thinking about valuations of F1 teams, when we put out our list in 2023, the average team was valued at $1.88 billion, which was 276% up from 2019 when we had the average team at $500 million.
Yeah.
So, I mean, obviously, whether it's the McLaren sale or kind of other stake sales floating around, we've seen things continue going up and up and up. Where do you see that going? Are we going to see these teams continue to mature the way that we've seen kind of the major American teams mature?
I think you have to. I think you have to for a couple of reasons, right? So go back to your, when you were looking at teams that were, 500 million, at the time there was no cost cap.
Yeah.
So you had a really unpredictable balance sheet.
Yeah.
And then secondarily, my as we talked about, my revenue base is highly repeatable cash flow. So that all adds to valuations. Again, we've talked about, all these, open markets. McLaren just traded at, I think it was 5.3 billion. That puts them somewhere in the mid pack of an average MBA valuation. Yeah. So, you can't tell me that, and I saw your list where Ferrari at the time was 4.78 billion or something like that. That feels like it's about half light, right? Like, why is Ferrari at a global platform not up there with a LA Lakers at 10 billion? That to me tells me that these are still undervalued assets.
Before I let you go, I know you do a lot of business in golf too, so I want to kind of ask you about what your overview of the golf landscape is right now. Obviously, like in this PGA Tour Live Golf world, we've seen the competing tours push prize money up, change kind of the sponsor economics. I mean, what's going to play out with this potential merger is still very unclear. What do you see in kind of the sponsorship end of that? How is that space evolving? And are we getting to a point where we're getting to an unsustainable level?
I think golf is hitting candidly a bit of a hard patch right now, just because of a lot of that the confusion in the market over the situation with Live and the PGA. I don't think it was great. I think golf misses a singular global platform.
Be nice.
Yeah, which would be great. I think Live offered that. I think they're not getting the traction I think they had hoped. And I think, the other thing is I think sponsors are just a little bit wary in terms of let's say the male dominance in the sport. I mean, we still love platforms like the LPGA. We think those are, fantastic. PGA is still great, has a global audience. But I think until they clean up this situation with the PGA and the LP and Live, that sponsors are still going to kind of hold back a little bit.
Ricky Paugh, thanks for being here with us today.
Such a pleasure. Thanks for having me, man. Good to see you.